appreciate your insight, and we want to get those insights on this October crash. Secretary Yellen is warning that if Congress doesn't raise the debt limit by October 18th, that there'll be a financial crisis, a calamity, as she calls it. Is this what you think will trigger this October crash?
Well, I think it's already been triggered personally, because after I posted that market crash, the S&P 500 is really the S&P 7. And it's being held up by Treasury Secretary Yellen and Powell. So there's no correlation between the economy and what Yellen and Powell are doing. Now, I say one more thing, is that I'm a little strange in that I like crashes. So this next crash is going to be really, really good, but it'll bring down gold, silver, Bitcoin, stocks. But the good news is a crash is a good time to get rich. So that's why I'm optimistic, and I'm very optimistic on gold, silver, and Bitcoin, not on stocks.
All right. Well, let's first focus on the equity side of this crash, and then talk about gold, silver, and Bitcoin. So what do you think essentially really triggers this? When you say crash, how many percentage points are you talking here? What do you anticipate?
Well, the big debate is there inflation or deflation? And if you look historically, what's happened today is the nominal debt to GDP is a correlation of M2, the volume of money, times the velocity of money.
Right.
And the reason Yellen and Powell are scrambling is because they've expanded M2, so everybody thinks there's going to be inflation. But velocity of money, which is what Jim Records and I always talk about, the velocity of money is plummeting. People are not spending. So they pump all this money in, prices go up. Meanwhile, the Asians are catching up now. The ports are finally open. So it is transitory inflation. But the problem is we're stacked with this massive debt, and all it's done is bump up the stock market and real estate market. The money has not gone into the economy. That's the sad part. So the rich get richer, but the poor and middle class are getting poorer. It is tragic what's happening today.
So what sets this off? Do you anticipate that there won't be some kind of way to raise the debt ceiling come October 18th?
Well, they can do all they like, but I'll just say it again. It's M2, which is money supply, times velocity.
Right, but what's the trigger? What is the trigger that all of a sudden destroys investor confidence, which is already a little shaky at the moment when investors really look at the fundamentals? But what's the trigger that really shatters investor confidence in the equity markets?
Well, I don't know what it'll exactly be, but you can't keep printing fake money. That's M2. And the velocity of money keeps dropping, but the debt keeps going up. So you and I don't have to go to Harvard to understand that's not good. So they're just going to keep doing the same old thing. And meanwhile, that's what we're doing today is actually going to kill the economy too.